Well, howdy there, folks. How's it going, cowboys, cowgirls? Y'all ready for a good day out there? It's another dandy. Well, folks, howdy everybody in the chat. Hope everybody's doing phenomenal, as heard, always. We got just crazy market right now, folks. Crazy market. I need to turn my volume up. Crazy market. I mean, my goodness. Look at this. I mean, Whirlpool getting just smashed on here today, folks. 14%. I love it. I love it, baby. That's a stock I do want to likely buy in 2024. So my hope is that baby just continues to get wrecked here in the short term. I do believe their business will likely bottom either in the first quarter or second quarter. So that's why I want to try to position into that one in 2024 at some point. So loving that. RH is the same exact way. That's a stock I love to position in 2024. Hoping that one gets killed. I want to see that baby go under 200 specifically. Mattel, love to see that one get damaged. Dutch Bros, I always root for Dutch Bros to go down. The problem is they don't. Texas Roadhouse will be reporting earnings after the bell. Texas Roadhouse is a stock I absolutely love, and I want it to go down. There's a lot of things I want to go down, okay? But obviously, after the bell, Amazon's going to have the majority of our attention, right? The Amazon earnings are coming out. I did place a bet for entertainment purposes for you guys. I took a gamble for your guys' entertainment here today, okay? We'll see how it plays out. I risked $1,000 on this gamble. You want to see the gamble? I'll show you the flip and flapjack and gamble, okay? So, for your entertainment only, $1,000. I bought some Amazon calls that they all expire tomorrow, okay? One is I paid $1.12 for $130 strikes on those Amazons there. I paid $4.85 for $120 strikes. Do not try this at home, folks. This is dangerous gambling activity you're seeing here, but it's for your entertainment for this Twitch stream today. I said, what the hell? Let's make it a little extra entertaining just for today, okay? I appreciate everybody joining me, so I'm like, okay, I'll risk $1,000. And then the last one is 140 strikes, 15 cents, and I got 5 contracts there. If Amazon goes beast mode tomorrow, it's going to be looking like a lot of money. If it doesn't, all $1,000 will be lost. After Google's earnings, Meta earnings, Visa earnings, Microsoft earnings, there's a very high probability Amazon earnings are going to be extremely good. And the difference between Amazon and the other stocks is all these stocks have kind of gotten killed. And so Amazon's gotten to go past the slaughterhouse, already gotten hit very hard. Like if we pull up Amazon actually here, let me get rid of all these comparison stocks here. If we pull up Amazon, just in the short term, the stock's been hit so heavily because of all the other stocks, right? I mean, stock's down about 5% roughly. So, and that's just in the past 5 trading days. And it's really due in part to the fact that, all these other stocks have just gotten really, really hit. And it's pulled down Amazon, obviously pulled down the Qs. So we'll see what happens there. Mr. Softy giving up all the gains. Look at that, folks. Mr. Softy's back to where it was prior to earnings now at this point in time. Prior to where it was. Yeah, that's interesting. Very interesting to see Mr. Softy all the way back there. Wow. Very interesting. Commodities. Ooh. That's good news, folks. WTI is down here today. That is something we want to see. That's great news. $82. GSG, the commodity index, folks, down here today. That is something we want to see. That's great news. I love it. I love it. I love it. Safety stocks. Not the best day, not the worst day for safety stocks, folks. Mr. Softy, obviously, like we spoke about, down 3% here today. Apple's down over 2%. Apple down to $167 a share. Are we talking jam or are we talking jelly? JM Smuckers is down here today, $112. Kraft Heinz down, Walmart down, Kellanova down, Pepsi down, Clorox down, Costco down, Coca-Cola down, Procter & Gamble down. As far as not much else happening under the safety stocks. Oh, did we already get a hype train today? Are we already on a hype train, folks? That's pretty amazing if we already hit that. Stocks I'm hedged against are looking very well here today. Apple obviously down, Tesla down, Chipotle down, Polaris down, so that is good news overall there. Hey, obviously, SDAO being up is good news for me. Toll Brothers up, Let's take a look at housing stocks. Actually interested to see what's going on there here today. Obviously, for housing stocks, Whirlpool's the one that's getting absolutely wrecked here today. RH getting hit hard as well. But the home builders are actually having a decent day out there. Enphase is having a really strong day going into these earnings, which makes me say, somebody knows something in regards to Enphase? What's going on here? Why is Enphase running into earnings? That's interesting. Oil and gas stocks, a lot of Red Dead Redemption out there here today for oil and gas stocks. And by the way, there's an interesting thought process in regards to oil and gas stocks that people are starting to think like, well, if oil and gas stocks, like instead of playing oil and gas stocks, if you're bullish on oil, just play oil, right? Planet getting hit hard today, but that one seems to come back at the end of the trading day. So I don't know, we'll see. Mattel, that's a very small, like teeny tiny position for me. I'd love to build that one bigger. I'm happy it's down big. Elf on a Shelf getting hit today. Shopify getting hit today. Meta getting hit today. Honest getting a little hit today. Texas Roadhouse getting a little hit today. We'll see how that one's earnings come in after the bell. I'm guessing it's going to be very good, but we shall see. Very mixed bag day for me overall out there. Overall, the public count's probably going to be negative today because look at Tesla and look at Meta, right? Those two stocks really run the public count in a major way. If those stocks are doing very bad, it hurts in a significant way. Obviously, the portfolio, right? I want to take a look back at big tech watch list here today. So check out big tech here, folks. Oobity booba stock getting hit 3.75% here today. Shopify over a 3% hit. Mr. Softy a 3% hit. Nvidia, could Nvidia go under 400? Wow, the drawdown in Nvidia has been pretty incredible here recently. So 10% the past 3 months, Nvidia has gotten hit. Still amazing on the 6-month chart, but it's really gotten hit since about August or so when it had that kind of blow off top to 500. Interesting. Wow, Nvidia flirting with going under 400, folks. We shall see. So UPS, that's not good, folks. UPS numbers looking weak. Consolidated revenue is $21.1 billion compared to $24.2 billion actually last year. Consolidated operating profit $1.3 billion. Adjusted consolidated operating profit $1.6 billion. Not great news for UPS here. I do wonder how much Amazon's hurting UPS. I'll be honest with you guys. Amazon has spent a fortune. A fortune. Oh, cool. You got more emotes out there. Amazon's really spent a fortune on building a fulfillment, not just the fulfillment network, but obviously all the trucks they have, all the planes. They've spent a fortune on that over the past 5 years or so. And I do wonder how much it's really causing damage to companies like UPS and FedEx. I really do, right? And it seems like it would cause a little more damage to UPS than FedEx, although it could cause damage to both, right? But you look at Amazon, you look at UPS numbers here, these aren't very good, folks. So that's bad to have that sort of revenue drop on a year-over-year basis. Operating profit fell off a cliff for UPS here. This is not great. International segment got hit, right? But the U.S. domestic was really, really bad for the company. Really bad. Revenue down 11.1%. Wow. Maybe I should sell my options on Amazon before we get into those earnings. I don't know. This UPS number makes me feel a little unconfident, folks. I don't know about this. I don't know, folks. I might have to getting a little concerned after these UPS numbers. I'll be honest with you guys. Oh no. All right, folks. After the bell here, market closed in 30 minutes, and all these earnings start dropping. We're rooting for Amazon to go up. All right, Amazon up. Enphase, I'd rather see Enphase go down just for the mere fact that I think most people are underwater on Enphase. And if anything, I think a lot of people are looking at that one as a buying opportunity. So I would kind of probably root for that one just to go down. Intel, don't really care. to be honest. What happens there? I guess I'd rather have it go down because that could make potentially NVIDIA and AMD cheaper, could pull down those stocks. And I might eventually buy NVIDIA. I might eventually buy AMD. We'll see. Chipotle, we're rooting for Chipotle to go down. We want Chipotle to get crushed like a souffle. You ever heard that expression before, folks? Oh, by the way, hello. I'm going to get in the chat right now. Let me get in the chat for a moment because once earnings start coming out, it's hard to get in the chat at that point because there's too much craziness. So, all right, let's see what's going on. What do you think of repricing PEs with higher interest rates if they last longer? I think a lot of that's been transpiring, to be honest, in kind of re-rating of valuations on stocks, given that people are thinking higher for longer, right? And so I think that's a big component of why you've seen valuations on stocks drop considerably. I mean, it's very commonplace now to find a ton of great growing companies trading at forward Ps under 20. You couldn't find stronger growth companies trading at forward Ps under 20. That was very rare. But right now, I could give you a long list of those sorts of companies. I mean, companies like American Express come to mind. Companies like Meta come to mind. Companies like Google come to mind. I mean, it's a long list of these folks, okay? Somebody says, hello, brother. Go. Oh, Shaheen. Shaheen's in the chat. Nice. Hello, Shaheen. I didn't know you were able to tune into these Twitches. So, hello. Hope you're doing well, man. Go Fubo. Yes. Can't wait for Fubo earnings. That's going to be an exciting one. Jeremy, respect your opinion, but heard your comment that Biden is an astute politician. It's unfortunate and sad he has severe cognitive decline. Maybe his handlers, but not him. Yeah, that was funny. I made that comment, and now let people understand there's a difference between being a really good politician and necessarily being good at your job, right? So you might think Biden's horrible at his job of being vice president in the past or being president now or whatever. I have no opinion on that. On how he does his job, I have no opinion. I don't care what other people's opinion is. But the one thing you can't disagree with when it comes to Biden is he's a phenomenal politician. There's a difference between a politician and how you actually do at your job. Politician is just about getting the votes to get in office, right? And making sure you set up things and you network with the right people, you're in with the right people, and you know how to play the game of politics. The game of politics is very different, right? The best person to be the president of the United States is never the best person. The best person, I can guarantee you there's some amazing people in the United States of America that could do a phenomenal job being the president or being politicians. They would never win an election because they don't understand the game of politics. The game of politics is a whole different game, and that's the thing I don't think a lot of people understand unless you're maybe on a little higher level. Let's just call it that. So anyways, I think the people on the higher level, I think you guys get kind of what's going on there, right? When it comes to the game of politics, it's very different. Somebody says, go Palantir and PayPal. Yeah, Palantir earnings. Oh, I can't freaking wait for that. Can you imagine how crazy the Palantir earnings live stream is going to be, folks? Oh, that's going to be a wild one. Palantir earnings live stream could set a new record. It could beat Meta. It could beat Meta, folks. You know what? I'll make a prediction now. The Palantir live stream, when we do that one, it will be a record breaker. It will be an all-time record breaker. So, Meta cash flow, unlike any other company, if it dumps, it's due to misunderstanding of financials. Preach. Somebody asked when I'm buying Enphase. I mean, there's just too many other buying opportunities right now for me to get into Enphase at the moment. If Enphase, spikes down here after the bell, maybe it changes something for me. But I mean, there's so many buying opportunities. Maybe Enphase would be a stock I was buying right now if it wasn't for the fact that there's a million other stocks that I love right now. This is the trouble in this market, folks. Tesla also seems to be weakening here, folks. Look at this drop just recently in the past little bit of time here. Tesla's just dropped in a significant way in a very short amount of time here. This should be an interesting close, a very interesting close. Somebody says, hey, Jeremy, what was your best return in percentage on a single investment? My best return on a single investment would be... So I had some really good ones over the years. Monster comes to mind. Cabela's comes to mind. Trinity Industries comes to mind. Obviously, Tesla comes to mind. Apple had a really good return for me. Cirrus Logic was a really good returner for me. But ultimately, ELF, as far as a percent, ELF was the biggest return ever for me. I can't think of anything that's been bigger than ELF. I can get UPS out of here now. Let's go ahead and throw up Amazon. So there's my Amazon shares there. So I got $125,000 roughly in the public count riding on Amazon into these earnings after the bell, which are going to be out very shortly, folks. We're only, 10, 12 minutes away from market close. So $125,000 worth of shares, a little over 1,000 shares. And then my fun little gamble for some entertainment purposes is I got these calls on Amazon. All right, about 7 minutes till market close here, folks. 7 minutes till market close. If you don't know, if you're just joining in, we have Amazon after the bell. Important stock for me, obviously, and maybe some people. By the way, does anybody own Amazon stock outside of me? And I'm talking about not through an ETF or something. Do you own Amazon stock straight up? If you own Amazon stock straight up, let me know in the chat that you own Amazon stock straight up, and let me know how many shares you own, because I'm genuinely curious. I know it's not as popular a stock, obviously, as a Tesla or a Palantir or a Meta or even some of those stocks. But let me know how many of you guys actually own it here, because I'm really interested to see. Let's see. Oh, a good amount of you guys own Amazon stock. Okay. Some of you guys got like 7 shares, 20 shares, 300 shares, 145, 74, 100 shares. Dang, somebody claims they got 2,000 shares of Amazon. Wow. By the way, guys, we also have Texas Roadhouse earnings after the bell as well. Do not let me forget about Texas Roadhouse. I'll have to check in on that. CNBC won't be talking about it because it's not a big company. That is an important one I want to pay attention to.
Higher for Amazon. Last thing I'll say, Scott, is that, of course, this is an e-commerce company, although that is not the profit engine. The margins are much thinner there. We're heading into the holiday quarter, so Amazon will give guidance, and that's got to be good for the street.
Well, we'll see in the next few minutes with that. Deirdre Bosa, thank you very much. I turn back to Mike Santoli. You look at tech, these losses over a 1 week period. Alphabet down 11, Meta down near 8, Intel's almost down 9, AMD down 9. Pretty astounding.
Yeah, they've become essentially the source of funds to do anything else, which is possibly to put it in cash, just because they have held up that much better. Look, they are growing more reliably than the rest of the market, but they just probably got too much credit for that in the short term. Most of them still in uptrends, the likes of Intel not so much. But I do think it'll be interesting to see what they can make out of this. Will it be 3 of these days in a row with big cap tech earnings being reported and you sell the number? That would be unusual and worrisome.
And we will find out.
PayPal's green. PayPal's green.
Amazon on deck in OT, which I send it to now with Morgan and John.
We lost so much money. Woo!
A little rough. The scorecard on Wall Street, but hey, winners stay late. Welcome to Closing Bell.
A little rough, you're telling me, John Fort. Alrighty, folks, earnings are hitting in the next few minutes. We got Enphase, Amazon, Texas Roadhouse, Intel, Ford, Chipotle, many others. All those earnings are about to hit in the next few minutes. Everybody, get in your guesses now. How much was the public count up or down today? Spoiler alert. It was a down day for the public count. Everybody get in your guesses, get in your guesses, get in your guesses. Let's see who's going to be right today. Oh, Amazon. Wait, is it popping? Hold on. Let me put up my number, and then we'll go from there. 39,000 down here today. It might be better tomorrow. Oh, boy. What we got?
Reactions, but I think a lot of it, the results haven't
Can't get too excited.
I'll give you that. They've been, guidance has been weak.
Don't get too excited.
The earnings have almost been a sideshow the last
We know what
few
happened
weeks.
with Meta
We had
yesterday.
Interest rates and the geopolitical uncertainties. You had, before the Middle East flare-up about 2 weeks ago, the S&P was actually up on the month, and then we've been trading lower as we've seen increased uncertainty there, interest rates rising, and earnings not being the greatest. So I think earnings haven't helped, but they aren't the only factor at play here.
All right. Mike Santoli joins us here on set,
60
as well
cents.
as we do go through these Amazon results.
141.
Do want to get your take on the fact that NASDAQ Composite in credit territory, the S&P 500... And I'm already going to Deirdre Bosa now for those Amazon results. Dee, what do you have for us?
I'll be quick, Morgan. Let me give you the top and bottom lines, which are a beat, a massive beat in terms of earnings per share. 94 cents versus 58 cents expected. On the revenue side as well, $143.1 billion versus $141.4 billion. Amazon shares are only up 2.6%. So let me keep diving into these numbers. We're going to want to look for AWS as well as that guidance, and I'll come right back.
All right, Deirdre Bosa, thank you. Mike Santoli, I will go right back to you.
Yeah.
AWS is really going to be the key here, but also online stores and what we see in terms of the e-commerce side of things and ad revenue continuing to hold up. In the meantime, ahead of this, we saw mega cap tech smacked around again today.
Yes, just a little bit of an excess of, I wouldn't say complacency, but belief that these companies could remain impervious to the macro and the rate story. So a sell the...
Folks, they just reported 94 cents versus 58 cents were reported. If this stock is not up minimum 10% tomorrow, if not 15, 20%, there's no hope for this market. I want to be freaking clear about this. They just beat by, oh gosh, well over $1.5 billion. That EPS beat is crazy. Crazy EPS beat. If this stock's not up 10+% tomorrow, there's no hope for this market. The minimum 10%, if not 15, 20% move tomorrow, folks. This is insane.
Remember, Meta reacts to the upside on the reflex, and then it's sold off the next day.
Yeah, I mean, I'm waiting to hear Dee's perspective on AWS.
I mean, come on.
It does look like revenue-wise it came in line.
No, it wasn't in line. They fucking beat, Johnny.
Operating income-wise, better than expected. And so I wonder, Paul, you're still with us. What's your take on the importance of the cloud results? Because we got strong cloud results for the market overall. We got strong cloud results from Microsoft, and it doesn't seem to have helped much this week.
Yeah, I mean, I think that it's a very big part of Amazon's business, so you want to see that strength, especially since they discussed that in their last earnings conference call. They were talking about seeing pickup in that. So if you saw a reversal there, I haven't been able to read the report, that would be concerning. On the retail side, though, they've also talked about how their margins last quarter had been improving for 5 straight quarters. So
guide light, but Amazon guides light many times, so that shouldn't freak the market out in regards to that.
And energy prices declining, that's positive for the consumer, helps to offset some of the uncertainty with student loans. So I think in that respect,
what's going on with Enphase?
So
this is Enphase being killed.
Okay, we're going to go back to Dee, who has more detail on the Amazon results.
Yeah, so you might call these results a little more mixed. You can tell the market's trying to digest them as well. But on that cloud front, that all-important AWS number, it is a slight miss here. 23.2 billion was expected. It came, 23.2 billion was expected. It came in at 23.1 billion. That is a year-over-year increase of 12%. Last quarter's year-over-year increase was 12% as well. So we can't really say right now that this is a bottom. We're going to ask.
Yeah, that's going to be important on the conference call. They're going to ask a million questions, a million different ways about Amazon Web Services. We'll be listening to the conference call live on here, by the way. That will be what ultimately, if you want to wonder what's going to push Amazon stock up 10, 15, 20%, is if the executives are like, yeah, we think the bottom for AWS has happened.
That mid-range is lower than what the street was expecting. Operating income between $7 and $11 billion. The street was looking for $8.5 billion. Shares are up 4%, so not a hugely strong beat, but again, we'll continue to digest the rest of the numbers.
When you have these stocks that have outperformed by these massive margins up to this point, it means everybody granted them the credit in advance for making these numbers and being on a growth path that was going to be a little more predictable than the rest of the market. So to me, it's that adjustment in expectations versus reality, a little bit of a crowding effect in there as well. But Amazon's down quite a bit since before Microsoft and
79,
reported,
Enphase,
right? So
79.
That again, the bar might have been lowered.
All right, well, we've got another earnings mover to tell you about. That's L3 Harris, the defense prime.
Damn you, Chipotle. I hate you.
Looks like a beat on the top and bottom lines.
Hate you,
earnings
Chipotle.
coming in at $3.19 adjusted per share. That was better than the $3.03 that the street had been expecting. Revenues also beating $4.92 billion versus the $4.76 billion that had been expected. Total strong backlog growth. 49% growth in that to $32 billion. Continued demand in strategic national security-focused acquisitions, providing longer-term visibility. That's according to the letter from the CEO, Chris Kubasik. You're seeing book-to-bill 1.17 times, 16% increase in top line. That's what that revenue number represents year on year as well. I'll note shares are up about 0.5% right now. We have the CEO, Chris Kubasik, coming on exclusively to break down these results and more before he speaks with analysts on the conference call tomorrow morning. So that's coming up just a little bit later.
So Enphase did $551 million of revenue, and the expectations were for, let's see, 551. Oh, so it looks like Enphase came in light on revenue, and I'm sure those numbers had been brought down there. Let me put these close together here. Oh, not that one. We need this one. As far as where's EPS? EPS looking at 80 to 84 cents, and we have, oh yeah, that's a big miss for Enphase. Analysts were at $1 expected for EPS. So Enphase came in with a bad double miss here, folks. We're going to come back to Amazon. So Texas Roadhouse earnings just hit. Not good, folks. Not good. So revenue was a banger for Roadhouse. They did $1.1 billion in revenue in this most recent quarter compared to $993 million in the same quarter last year. But the problem is food and beverage costs was up substantially, $386 versus $342. Labor was up $378 versus $330. Rent was up a little bit. Other operating, whatever that is, $169 versus $146 there. Pre-opening costs is up. That makes sense. Depreciation amortization was up about $6 million, whatever. General administrative was up about $5 million roughly there for the quarter. So income from operations for Roadhouse actually dropped. This, you never want to see that. When you got a company that's growing revenues, the way Roadhouse is growing revenues, right? 12%, right? Almost 13%, 12.9% revenue growth. And income from operations fell 1.9%. Net income up 2.3%. That's a bad quarter. That's bad. Texas Roadhouse usually knocks out a ballpark, but they didn't this time. So let's run through. Let's ask ourselves, Enphase is getting killed. Were these Enphase numbers really bad? We know they missed revenue. We know they missed EPS, right? Were they really that disastrous? Yeah, they were. No, that's not very good. Okay, revenue came in 551, 711 they did in the same quarter. Wait, that's on a sequential basis? Oh my gosh. So they dropped from 711 on a sequential basis to 551? Whoa, that's a huge drop just on a quarter-over-quarter basis. Now, gross margin actually went up for the company, so that's impressive, 47.5%. That's a really good sign. Operating expenses did drop for the company, but the problem is operating expenses didn't drop the way you'd want to see it drop, considering the company is, let's say, $160 million light for revenue on a sequential basis, quarter over quarter, right? But yet operating expenses only dropped less than $10 million. So operating income fell off a cliff, obviously, $117 million versus $170 million just last quarter. Net income came in at $113 million versus $157 million just a quarter ago, right? And diluted EPS came in at 80 cents versus $1.07. Not great. Not great. Total revenue for the quarter came in 551 compared to 711. Second quarter, due to macroeconomic conditions, our revenue in the United States for the third quarter of 2023 decreased approximately 16% compared to the second quarter of 2023. Our revenue in Europe decreased approximately, Europe's bad, 34% compared to the second quarter. Wow. We exited the third quarter of 2023 with $1.78 billion in cash and cash equivalents, marketable securities. That's good news. And generated $145 million in cash flow from operations in the third quarter of 2023. In July 2023, the board of directors approved a share repurchase program with an authorization purchase of $1 billion of shares of the common stock. Okay, and they're buying a bunch of stock back, it looks like, and they probably will continue to at much cheaper prices. Damn you, Chipotle.
We have a business, and we're going to continue to push against what makes Chipotle special, which is great culinary.
Which is going up on your customers so you make so much money, Chipotle. Don't like you.
And all that combined results in just a tremendous value proposition.
And Brian, you've talked with us before about pricing levers, the ability to kind of adjust pricing as needed. The company just took price in the last month. Is that going to be it to end the year?
Yeah, we don't foresee taking any more pricing this year. And, I think the thing that's important is in the last quarter, the one we're just reporting, we really didn't take price. This growth was driven by transactions and great operational execution. And, I'm delighted to see that we're seeing consumers respond to, what I mentioned earlier, the great culinary, the great speed. And obviously we took some price, frankly, the last 2 weeks in October. And, that was really to offset some.
When he says we took some price, basically that just means they went up on price on their customers, okay? So just a fancy way of putting that.
And it's Morgan. It's great to have you back on the show. I'm going to ask you a question that many of our CEOs in the food and beverage business as well as in medtech business have been getting asked over the past couple of weeks, and that is your take on these GLP-1 drugs, these weight loss drugs. Have you seen any kind of impact? How are you thinking about that from a business perspective, if you are?
Yeah, sure. So thanks for the question. Good to see you, Morgan. These GLP-1 drugs, we're really not seeing any impact in our business. And the more we study it and understand it, frankly, I think this is another place where we're positioned really well. Our food is clean, highly customizable. So if you do decide to go on these GLP-1 drugs, you can get exactly what you want to eat, as evidenced by some of our lifestyle goals, right? Remember when everybody was talking about keto, low carb.
Chipotle's getting too damn expensive. That's all I got to say, man. It's almost getting up to restaurant type prices now.
And then behind all of it, it is really rooted in this idea of clean food with integrity. So we're not seeing any impact from it today, but as we look out into the future, we think we're well positioned, even for those that do decide to use the drug for weight loss.
Hey, Brian, it's John Fort.
Enphase, $80 right now, folks. Enphase getting just hammered after hours.
Making sure that you've got
That's
the
vicious.
employees in the store really working down that line and being efficient at key times. You mentioned labor costs. How is the tightness in the labor market and the turnover that you're seeing or not seeing in the workforce impacting your ability to really keep those aces in places and be as efficient as you want to be?
Look at Amazon's operating income. Amazon's operating income increased to $11.2 billion in the third quarter, compared with $2.5 billion in the third quarter of 2022. I mean, what an insane increase year over year in operating income for Amazon, right? North America segment operating income, $4.3 billion compared to an operating loss in the same quarter last year. International came through with a big number. AWS operating income, $7 billion compared to operating income of $5.4 billion in the same quarter last year. Net income increased to $9.9 billion for Amazon in the third quarter, 94 cents a share compared to $2.9 billion in the same quarter last year, folks. Overall, me personally, am I happy with Amazon earnings? And the answer to that is abso-dang-lutely. Obviously, this conference call is going to be everything when that gets kicked off, and I'll listen to that live and react to that live, and that's going to be what dictates where Amazon stock goes tomorrow. If you're wondering, is Amazon stock going to blast higher tomorrow or sink like Meta did? It's all coming down to this conference call. If the executives say, we believe essentially AWS is bottomed and it's going to get better from here. If they say anything like that, it's boom time for the stock. If they say anything on the other side, like, oh, no, we don't think it's bottom, it could get worse next quarter, then we're going to go down to Chinatown, just like, oh, there's Enphase.
Expecting. Now, during the third quarter, they said that their revenue was down 16%
I didn't even see the outlook.
in the U.S. and 34% in Europe, down 34% quarter over quarter, thanks to weakness in key markets and the buildup of inventory. Of course, this does mirror what we've heard from SolarEdge, who last week announced that they were going to see a very disappointing results thanks to a slowdown in Europe. Once again, the stock down 14%. John?
Yeah, Pippa, thank you. That's rough.
No
Up next,
way.
we're going to dive deeper into Intel's strong results.
No
It's
way.
aggressive.
That guide.
Revenue, disappointing.
No freaking way.
Man and machine in the
Thanks,
kitchen.
guys.
Stock's up 5%.
No
Chipotle.
way. The guide for
Solar company
Enphase.
Enphase Energy is sinking on earnings, though. Pippa Stevens.
Oh my
Hey,
gosh.
Morgan, yeah, this stock is dropping here in extended trading after posting a mixed quarter. So EPS did beat, with the company earning $1.02 per share on an adjusted basis. That was 1 penny above estimates. But revenue did miss expectations at $551 million versus $566 million. But it really is this really disappointing guidance that's what's sending the stock 14% lower here. They say revenue in Q4 between $300 million and $350 million. That is well short of the $584 million that Wall Street was expecting. Now, during the third quarter, they said that their revenue was down 16% in the U.S. and 34% in Europe, down 34% quarter over quarter, thanks to weakness in key markets and the buildup of inventory. Of course, this does mirror what we've heard from SolarEdge, who last week announced that they were going to see a very disappointing results thanks to a slowdown in Europe. Once again, the stock down 14%. John?
I knew it was going to be bad earnings for Enphase. I didn't know it was going to be that bad. That guidance, guys, is shocking. Like the miss on the EPS and miss on the revenue, okay, I think that was kind of to be expected. But that size of a miss on the guidance? No freaking way. What? That's a crazy miss on the guide. No way. No freaking way. Revenue to be in the range of 300 to 350. So that's a midpoint. Basically, they're expecting $325 million of revenue. When analysts were at whatever analysts were at there, was it 550 million or something like that? Oh my gosh, are you kidding me? You'll be flipping my flapjacks here, folks. That's a crazy, that's one of the worst numbers I've ever seen in my life in terms of a guidance miss. It's certainly up there. Like, I can't think of any guidance that was like more shockingly bad than that. That's a crazy number. So analysts were at 566. 566 million was what analysts were at. And the company just guided for 325 at the midpoint. What? It's that bad? It's that bad? Which includes shipments of 80 to 100 megawatt hours of IQ batteries. GAAP gross margin to be in the range of 46 to 49% with an IRA benefit, and 38% to 41% before net IRA benefit. Non-GAAP gross margin to be within a range of 48 to 51%. Non-GAAP operating expenses to be 142 to 146 million. Non-GAAP operating expenses to be in a range of 85 to 89 million, excluding 57 million estimated for stock-based compensation. I mean, the reason this is so shocking, folks, is not just the size of the miss in terms of revenue. It's the fact that this company could lose money. I would say there's a high probability Enphase loses money next quarter. Analysts had them at $1.10 positive EPS. I mean, there's a realistic possibility Enphase loses money. I'm not talking about has a nice profit like analysts are expecting. There's a real potential Enphase loses money or has a very, very miniature profit, if that's even possible. I don't even know if that's possible. They're probably losing money next quarter, folks. Holy smokers. That's no jokers. So, folks, did you see Amazon? Look at this. Amazon, so this is a 3-month period. Amazon business is accelerating, it's clear. They did $143 billion of revenue. That compares to $127 in the same quarter last year, right? Total operating expenses was only up $7 million, but yet net sales was up about $16 billion, right? So you got about $7 billion there, $16 billion there. That's going to be very, very good, right? Net income comes out at around $9.9 billion versus $2.8 billion the same quarter last year. And then the EPS comes in at 96 cents versus 28 cents, which is what? That's well over a 3x. Well over a 3x of EPS, folks. That's flipping flapjack and phenomenal. And then I want to see Amazon's balance sheet now. Look at Amazon's balance sheet, folks. $49 billion of cash and marketable securities. Cash and cash equivalents, $49 billion. So almost $50 billion just of cash and cash equivalents. That's a big number. Amazon now has $14.5 billion of marketable securities, $486 billion of total assets versus total liabilities of, where's total liabilities at here? Do they not put just their total liabilities? Additional paid-in capital, retained earnings. Well, total stockholder equity for the company is up to $182 billion now at this point in time for the company. So, yeah, obviously Amazon's made some phenomenal strides over the years in regards to their balance sheet here. But in terms of their stock price, it's all coming down, folks. It's all coming down to this conference call. This conference call is going to dictate exactly. And so what I think we'll do is why the conference call is going on and why I'm reacting to that, what we'll do is we'll keep up Amazon's stock price. So that way, as the conference call is going on, we can kind of see how the stock's reacting depending upon what they're talking about. So that should be very, very intriguing. And let me get that conference call ready to rock and roll. So as soon as it starts, we'll be ready to listen to it. I don't want to take any risk here. These Amazon earnings are phenomenal, but AWS is the big question mark, and this is what the whole stock price is depending upon tomorrow. It's all on AWS. It's all on AWS. And AWS is, this is for the 3 months ending September 30th. They did $23 billion in net sales from Amazon Web Services versus 20.5 was expected. Operating expenses, $16 billion versus 15.1. So operating income from AWS is nearly $7 billion versus 5.3, right? So clearly AWS is in a good spot, but there's the question is AWS going to strengthen or weaken? That's what's going to shake the stock in a massive way on this conference call. Did they have some commentary on AWS here? Let's see. That's all that stuff. Amazon announced they're going to hire 250,000 full-time and part-time and seasonal employees in the U.S. If anybody needs a job, which I doubt anybody's watching this and needs a job, and probably most of you guys are watching this while you're working right now, Amazon's hiring. I can tell you that much, man. Amazon is hiring. So, in a big way. Delivery rolls to more than $20.50 an hour. Okay. Yeah, nothing really there about AWS. Let's see. Investment on behalf of our customers. Okay. I want to hear them talk about the business here. Holy smokes, they put a lot. Obsessing the customer experience. Partner with BuzzFeed. They're still around? I didn't know that. Attracted 15.1 million viewers for Thursday Night Football season opener. Prime Video's most watched Thursday night game ever, according to Nielsen. Through the first 6 games, Thursday Night Football averaged 12.9 million viewers, a 25% increase from last year's 6-game average. Last year's Amazon's numbers were so bad for Thursday Night Football. I mean, I'm not surprised. Like, it could be a little bit better this year. And I believe for one of those games, didn't they have a Chiefs game on? And if you don't know, the Chiefs have this whole thing going with Taylor Swift right now. Taylor Swift and Travis Kelce, the tight end of the Chiefs. And so if I recall, there was a Thursday Night Football game with the Chiefs on it. And so that's automatically going to be banger ratings, literally because of the whole Swiftie effect and all that crap. So do keep that in mind. There's got to be more info about AWS here. AWS, it didn't tell us much other than the numbers. Let's see, we had a strong third quarter as our cost to serve and speed of delivery in our stores business took another step forward. Our AWS growth continued to stabilize. Okay, so that's an important word choice there, folks. Our growth continued to stabilize. The big question on the call is going to be, what are we talking about growth in Q1, Q4? Like, what are we looking at here, okay? So that's what the big question's going to be, and that's what's going to dictate the stock price. Our advertising revenue grew robustly, and overall operating income and free cash flow rose significantly. The benefits of moving from a single national fulfillment network in the U.S. to 8 distinct regions are exceeding our optimistic expectations, and perhaps more importantly, putting us on pace to deliver the fastest delivery speeds for Prime customers in our 29-year history. Wow. The AWS team continues to innovate and deliver at a rapid clip, particularly in generative AI, where the combination of our custom AI chips, Amazon Bedrock being the easiest and most flexible way to build and deploy generative AI applications, and our coding companion Code Whisperer, allowing enterprises to have the equivalent of an experienced engineer who understands all their proprietary code and is delivering momentum with customers, including Adidas, Booking.com, GoDaddy, LexisNexis, Merck, Royal Philips, United Airlines, all of whom are starting to run generative AI workloads on AWS. Between AWS Reinvest and our 29th holiday shopping season, this particular action-packed time of year, at Amazon, we're excited for what's to come, essentially. Okay, so
compared to 46.2% in Q2, the increase was driven by increased net IRA benefit. GAAP gross margin was 47.5% for Q3. GAAP and non-GAAP gross margin for Q3 included $14.5 million of net IRA benefit for our microinverters made in the U.S. and shipped to customers in the quarter. Non-GAAP operating expenses were $99 million for Q3, compared to $98.2 million for Q2. We are diligently managing operating expenses and will continue to do so in the coming quarters. GAAP operating expenses were $144 million for Q3, compared to $153 million for Q2. GAAP operating expenses for Q3 included $41.1 million of stock-based compensation expenses and $3.9 million of amortization for acquired intangible assets. On a non-GAAP basis, income from operations for Q3 was $167.6 million.
This is probably the CFO.
$230.5 million for Q2. On a GAAP basis, income from operations was $118 million for Q3, compared to $170.3 million.
So while we're waiting for the Amazon call, what would you guys rather watch or listen to? Enphase conference call or CNBC? Enphase conference call or CNBC? You guys tell me what you'd prefer here. Obviously, once Amazon call starts, we're going to be fully focused on the Amazon call, which that starts in a little while. But let me see what's going to win. So far, CNBC's winning. I'll be honest with you guys. We got some Enphase folks, but definitely CNBC's winning.
So that is unclear. And what's also unclear is this may only apply to Apple Watches manufactured in China. Apple has moved a lot of manufacturing outside of China for the Apple Watch to countries like Vietnam. So they may be able to skirt around this even if the Biden administration issues the ban. But again, You're seeing Massimo benefit from this. Shares up nearly 12%, Melissa.
All right, Steve, thanks. Steve Kovac. Apple shares down by about 0.8%.
Well, think about this. So we were talking a month ago about China banning government employees using iPhones there. Now we have our administration saying that maybe you can't bring, watches in.
Somebody said send them
China.
the trick
This does not seem like a great situation for Apple.
Yeah.
In the old days, Apple just would have bought them, I think.
Right.
Problem solved. It's a $4 billion company, and, it's like those aren't the days we're in anymore, though.
They don't really do that, do they?
No, not now. I mean, now, remember how much Google buying Fitbit?
But
that was a lengthy review.
Yeah.
Chart on Apple, really, 150 really looks like there's good support there.
Right.
And I think it's the next stop.
Coming up, some big stock moves catching our traders' eyes. Results setting up UPS, Valero, and Altria lower.
150 for Apple? I would love that. Alrighty, folks, the time has come for the Amazon conference call. Where we got here? Which one's the Amazon call? Oh, here we go. Here we go, folks. Ready? There we go.
Marks, I'll be turning the call over to the Vice President of Investor Relations.
Here we go, folks.
Dave Files. Thank you, sir. Please go ahead. Hello, and welcome to our Q3 2023 financial results conference call. Joining us today to answer your questions is Andy Jassy, our CEO, and Brian Olsavsky, our CFO. As you listen to today's conference call, we encourage you to have our press release in front of you, which includes our financial results, as well as metrics and commentary on the quarter. Please note, unless otherwise stated, all comparisons in this call will be against our results for the comparable period of 2022. Our comments and responses to your questions reflect management's views as of today, October 26th, 2023 only, and will include forward-looking statements. Actual results may differ materially. Additional information about factors that could potentially impact our financial results is included.
Somebody asked if I'm going to be buying Amazon. It's very much a possibility if it goes down at all. The problem is there's so many stocks I want to buy right now, folks. There's like literally 20 stocks that I think are steal deals right now.
Press release, slides accompanying this webcast, and our filings with the SEC, each of which is posted on our IR website. You will find additional disclosures regarding these non-GAAP measures, including reconciliations of these measures with comparable GAAP measures. Our guidance incorporates the order trends that we've seen to date and what we believe today to be appropriate assumptions. Our results are inherently unpredictable and may be materially affected by many factors, including fluctuations in foreign exchange rates, changes in global economic and geopolitical conditions and customer demand and spending, including the impact of recessionary fears, inflation, interest rates, regional labor market constraints, world events, the rate of growth of the internet, online commerce, cloud services, and new and emerging technologies, and the various factors detailed in our filings with the SEC. Our guidance assumes, among other things, that we don't conclude any additional business acquisitions, restructurings, or legal settlements. It's not possible to accurately predict demand for our goods and services, and therefore our actual results could differ materially from our guidance. And now, I'll turn the call over to Andy.
Thanks, Dave. Today we're reporting $143.1 billion in revenue, up 11% year over year, $11.2 billion in operating income, up 343% year over year, or $8.7 billion, and $20.2 billion in trailing 12-month free cash flow adjusted for equipment finance leases, which is up $41.7 billion versus the comparable period last year. We continue to be encouraged by the progress we're making in lowering our cost to serve, improving our customer experiences, and investing for future growth. I'll start with our stores business. Our move earlier this year from a single national fulfillment network in the U.S. to 8 distinct regions represented one of the most significant changes to our fulfillment network in our history. This change has gone more smoothly and made more impact than we optimistically expected, and you can see the benefits in many forms. Regional fulfillment clusters with higher local in-stock levels and optimized connections between fulfillment centers and delivery stations mean shorter distances and fewer touches to get items to customers. Shorter travel distances and fewer touches mean lower cost to serve. But perhaps most importantly, shorter distances and fewer touches mean that customers are getting their shipments faster. We remain on pace to deliver the fastest delivery speeds for Prime customers in our 29-year history. And as I talked about last quarter, we know how important speed of delivery is to customer satisfaction and buying behavior. A good example is the significant growth we're seeing in consumables and everyday essentials. When customers are getting items as quickly and conveniently as they are now from Amazon, they're going to consider us more frequently for more of their shopping needs. As we've shared the last few quarters, we've reevaluated every part of our fulfillment network over the last year. The first substantial re-architecture centered on the regionalization change. We obviously like the results, but don't think we fully realized all the benefits yet. And we continue to make steady improvements in fine-tuning the placement algorithms to enable even more in-region fulfillment and to further increase consolidation into fewer shipments. We've also identified several substantial changes to our inbound processes that we believe could have a significant impact on our cost to serve and speed of delivery. We have a long way before being out of ideas to improve cost and speed. The team is really humming on this, and I'm proud of the way they're inventing and executing together. Moving to AWS and our investments in generative AI. AWS revenue grew 12% year over year in Q3, with $919 million of incremental quarter-over-quarter revenue, and now has an annualized revenue run rate of $92 billion. AWS's year-over-year growth rate continued to stabilize in Q3. And while we still saw elevated cost optimization relative to a year ago, it's continued to attenuate as more companies transition to deploying net new workloads. Companies have moved more slowly in an uncertain economy in 2023 to complete deals. But we're seeing the pace and volume of closed deals pick up, and we're encouraged by the strong last couple of months of new deals signed. For perspective, we signed several new deals in September with an effective date in October that won't show up in any GAAP reported number for Q3, but the collection of which is higher than our total reported deal volume for all of Q3. Deal signings are always lumpy, and the revenue happens over several years, but we like the recent deal momentum we're seeing. Top of mind for most companies continues to be generative AI. As I mentioned last quarter, we think about generative AI as having 3 macro layers, each of which is very large and each of which we're investing. A few updates there. At the lowest layer is the compute to train large language models, or LLMs, and produce inferences or predictions. The key to this compute is the chip inside it.
Look at the stock.
As we've shared, we've been working on custom silicon for training and inference with our Trainium and Inferentia chips, respectively.
Huge.
Recently, we announced that leading LLM maker Anthropic chose AWS as its primary cloud provider, and will use Trainium and Inferentia to build, train, and deploy its future LLMs. As part of this partnership, AWS and Anthropic will collaborate on the future development of Trainium and Inferentia technology. We believe this collaboration will be helpful in continuing to accelerate the price performance advantages that Trainium and Inferentia deliver for customers. In the middle layer,
basically, Jassy, pretty much without saying it, he's just kind of called the bottom on AWS.
Availability for Amazon Bedrock,
big,
which offers customers access to leading LLMs from third-party providers like Anthropic, Stability AI, Cohere, and AI21, as well as from Amazon's own LLMs called Titan, where customers can take those models, customize them using their own data, but without leaking that data back into the generalized LLM, and have access to the same security, access control, and features that they run the rest of their applications with in AWS, all through a managed service. In the last couple months, we've announced the imminent addition of Meta's Llama 2 model to Bedrock, the first time it's being made available through a fully managed service. Also, through our expanded collaboration with Anthropic, customers will gain access to future Anthropic models through Bedrock with exclusive early access to unique features for model customization and the ability to fine-tune the models. And Bedrock has added several new compelling features, including the ability to create agents, which can be programmed to accomplish tasks like answering questions or automating workflows. In these early days of generative AI, companies are still learning which models they want to use, which models they use for what purposes, and which model sizes they should use to get the latency and cost characteristics they desire. In our opinion, the only certainty is that there will continue to be a high rate of change. Bedrock helps customers with this fluidity, allowing them to rapidly experiment with and move between model types and sizes, and enabling them to pick the right tool for the right job. The customer reaction to Bedrock has been very positive, and the general availability has buoyed that further. Bedrock is the easiest way to build and scale enterprise-ready generative AI applications and a real game changer for developers and companies trying to get value out of this new technology. At the top layer, which are the applications that run the LLMs, our generative AI coding companion, Amazon Code Whisperer, has gotten a lot of early traction and got a lot more powerful recently with the launch of its new customization capability. The number one enterprise request for coding companions has been wanting these companions to be familiar with customers' proprietary code bases. It's not just having code companions trained on open source code. Companies want the equivalent of a longtime senior engineer who knows their code base well. That's what Code Whisperer just launched, another first of its kind out there in its current form, and customers are excited about it. A few last comments on AWS's generative AI work. As you can tell, we're focused on doing what we've always done for customers, taking technology that can transform customer experiences and businesses, but that can be complex and expensive, and democratizing it for customers of all sizes and technical abilities. It's also worth remembering that customers want to bring the models to their data, not the other way around. And much of that data resides in AWS as the clear market segment leader in cloud infrastructure. We're innovating and delivering at a rapid rate, and our approach is resonating with customers. The number of companies building generative AI apps in AWS is substantial and growing very quickly, including Adidas, Booking.com, Bridgewater, Clariant, GoDaddy, LexisNexis, Merck, Royal Philips, and United Airlines, to name a few. We are also seeing success with generative AI startups like Perplexity.ai, who chose to go all in with AWS, including running future models on Trainium and Inferentia. And the AWS team has a lot of new capabilities.
All in. We need the flapjack emote. All in. Push in the flapjacks.
Beyond AWS, all of our significant businesses are working on generative AI applications to transform their customer experiences. There are too many for me to name on this call, but a few examples include, in our stores business, we're using generative AI to help people better discover products they want and more easily access the information needed to make decisions. We use generative AI models to forecast inventory we need in our various locations and to derive optimal last-mile transportation routes for drivers to employ. We're also making it much easier for our third-party sellers to create new product pages by entering much less information and letting the models do the rest. In advertising, we just launched a generative AI image generation tool where all brands need to do is upload a product photo and description to quickly create unique lifestyle images that will help customers discover products they love. And in Alexa, we built a much more expansive LLM and previewed the early version of this. Apart from being a more intelligent version of herself, Alexa's new conversational AI capabilities include the ability to make multiple requests at once, as well as more natural and conversational.
Guys, this is huge. I actually hadn't seen this slide here. This is international. Look at the operating loss. It's almost non-existent international now, folks. This means international market looks like it's about to turn profitable, which is massive for Amazon. Massive.
Businesses is building generative AI applications to change what's possible for customers, and we have a lot more to come. We're also encouraged by the progress we're making in our newer initiatives, just to name a few. We're pleased with what we're seeing in Prime Video. Prime Video continues to be an integral part of the Prime value proposition, where it's often one of the top two drivers of customers signing up for Prime. We also have increasing conviction that Prime Video can be a large and profitable business in its own right as we continue to invest in compelling exclusive content for Prime members, but also offer the best selection of premium streaming video content anywhere, with our marketplace offering including channels where customers can subscribe to channels like Max, Paramount Plus, BET Plus, and MGM Plus, as well as our broad transaction video on demand selection. As we continue to invest in compelling content, beginning in early 2024, Prime Video shows and movies will include limited advertisements. We aim to have meaningfully fewer ads than linear TV and other streaming TV providers. And if customers prefer an ad-free option, we plan to offer that for an additional $2.99 per month for U.S. members. There is still a lot of work to be done and innovation ahead, but we're excited about our future in Prime Video. We're seeing progress on a number of our investments that expand our ability to serve more consumers and sellers in their e-commerce missions. Our emerging international stores continue to improve their customer experiences and profitability and are on a strong trajectory. Both consumers and sellers are excited about Buy with Prime, which enables third-party sellers with direct-to-consumer websites to offer Amazon Prime members the same fast payments and delivery options they receive on Amazon.com. We recently announced the capability for sellers to integrate Buy with Prime with their Shopify account, making it easier for Shopify merchants to manage their businesses with inventory pricing and promotions automatically synced in one place. And we're seeing very positive early response from sellers to Supply Chain by Amazon, a fully automated set of supply chain services where Amazon can pick up inventory from manufacturing facilities around the world, ship it across borders, handle customs clearance and ground transportation, store inventory in bulk, manage replenishment across Amazon and other sales channels, and deliver directly to customers, all without sellers having to worry about managing their supply chain. Our healthcare team is continuing to make healthcare easier for people to access. The Amazon Pharmacy customer experience has significantly evolved this year, and customers are responding to that both in their purchasing behavior and qualitative feedback. We built our XPass for customers to get unlimited supply of eligible medications for $5 per month, meaningfully reduced the cost for customers to get insulin and diabetes products, and partnered with Blue Shield of California to offer a first-of-its-kind model to provide more affordable pharmacy care to its 4.8 million members, providing fast and free delivery of prescription medications and 24/7 access to pharmacists. We remain convinced that we can be part of the solution in making healthcare a better customer experience. And our low Earth orbit satellite initiative, Project Kuiper, which aims to bring fast, affordable broadband to underserved communities around the world, took a meaningful step forward in the last few weeks with the successful launch of 2 prototype satellites. We will use this multi-month mission to test our satellites and network from space and collect data ahead of the planned start of satellite production later this year. I'd like to close by thanking our teams around the world who are gearing up for 2 of our most significant events across the company. First, our annual AWS reInvent conference that begins on November 27th. The team is excited to share a lot of new capabilities with customers, provide an array of opportunities for builders to learn and connect with one another. And on the store side, we've already kicked off what will be our 29th holiday shopping season. Prime Big Deal Days, held earlier this month, was our most successful October holiday kickoff event ever, with Prime members saving more than $1 billion across hundreds of millions of items sold. Just as we do all year long, we aim to make our customers' lives easier and better every day, and there's no time where it's more important to us that we deliver on this mission than during the busy holiday shopping season. With that, I'll turn it over to Brian.
Thanks, Andy. Overall, we saw strong performance in the third quarter. Worldwide revenue was 143.
By the way, real quick here, folks, look at this is a moment Jassy, kind of without saying it, kind of called the bottom in AWS, right? And the stock just went up immediately after those moments. But keep in mind, not everybody's on this call right now or placing trades based upon this call. That information is going to get out there a lot more over this next, I would say, 12 to 16 hours, which should be very intriguing.
$7 billion above the high end of our guidance range. North America revenue was $87.9 billion, an increase of 11% year over year. And international revenue was $32.1 billion, an increase of 11% year over year, excluding foreign exchange. During the quarter, we held our biggest Prime Day event ever, with Prime members purchasing more than 375 million items worldwide and saving more than $2.5 billion on millions of deals across the Amazon store. Outside of Prime Day, we've continued to see strong demand across everyday essentials, including categories like beauty and health and personal care. From a customer behavior standpoint, we still see customers remaining cautious about price, trading down where they can, and seeking out deals, coupled with lower spending on discretionary items. Building on the momentum from last quarter, we set another record for delivery speed. For the year-to-date period through the third quarter, we've delivered at the fastest speeds ever in the United States. These improvements in delivery speeds have been a key driver of growth and are resulting in increased purchase frequency by our Prime members.
Have you guys noticed a lot of stuff you order on Amazon is now getting to your house in less than 24 hours? I don't know if I'm the only one that notices that here in Vegas, but a lot of stuff I order now is coming within 24 hours. Let me know if you guys have been experiencing the same wherever you live.
Account management and more. During the quarter, we hosted Amazon Accelerate, our annual seller conference, where we launched a number of new innovations and product developments for our sellers, including Supply Chain by Amazon. We also continue to see durable growth in advertising, which grew 25% year over year, excluding foreign exchange, primarily driven by sponsored products as we lean into machine learning to improve the relevancy of the ads we show our customers and enhance our measurement capabilities on behalf of advertisers. We've seen strong improvement in our profitability. North America operating income was $4.3 billion, an increase of $4.7 billion year over year, resulting in an operating margin of 4.9%, up 100 basis points quarter over quarter. Since North America operating margins bottomed out in Q1 of 2022, we have now seen 6 consecutive quarters of improvement, resulting in a cumulative improvement of over 700 basis points over these past 6 quarters. The third quarter marked the second full quarter of regionalization within the U.S., and we're pleased with the early results. Regionalization has allowed us to simplify the network by reducing the number of line haul lanes, increasing volume within existing line haul lanes, and adding more direct fulfillment center to delivery station connections. We have also been focused on optimizing inventory placement in the new regionalized network, which, when coupled with the simplification mentioned earlier, is helping contribute to an overall reduction in cost to serve. Additionally, in the quarter, we saw benefits from lower inflation, primarily within line haul, ocean, and rail shipping rates, which were partially offset by higher fuel prices. While we are encouraged by the improvements in operating profit, we still see a lot of opportunity in front of us. In international, we were closer to break even during the quarter with an operating loss of $95 million. This was an improvement of $2.4 billion year over year. This improvement was primarily driven by lowering our cost to serve through higher productivity, decreased inflationary pressures, and improvements in leverage across our established and emerging international countries as we continue to focus on customer inputs and improve efficiencies within our operations.
Our next question comes from the line of Eric Sheridan with Goldman Sachs. Please proceed with your question.
Thanks so much for taking the questions. Maybe one follow-up on AWS and one on the ads business. Andy, would love your perspective. You know, the cloud optimization theme started in the second half of 22 when there were a lot of macro concerns. And then the AI theme really only sort of came to the forefront in the last 8 or 9 months. What's your perspective on how turning the calendar into 2024 and there being a new IT budget cycle could possibly lead us to put the optimization theme in the background and some of the AI theme to come more to the forefront when there might be more distinct budgeting around AI as a theme? That'd be number one. And then in your ads business, you're approaching $50 billion run rate, and it's compounding in the mid-20s. What are you most excited about on the initiative front to continue to build scale both on Amazon properties and possibly off Amazon as a broader digital advertising player? Thanks so much.
On the AWS side, you know, my perspective, you know, we'll obviously all have to wait and see to some extent, but my perspective is that in 2024, you're going to, I think a lot of the relatively low-hanging fruit on optimization has happened in 2023. It's not to say there won't be any more optimization. It's just that there's more low-hanging fruit when you have very large footprints and you've built a lot of applications on a platform. for you to go decide to optimize if that's what you want to go do. And so I think 2020, we're already seeing it now with the attenuation of optimization over the last several months. But I think you'll continue to see that attenuation continue. And we're already seeing more and more companies that are turning their attention to newer initiatives. And I think what you will see in 24 and 25 as well. I don't think it's a one-year deal. I think there's going to be a several-year trajectory. Is that you're going to just see a lot of companies not just looking at the new generative AI workloads, but also there was a significant number of new customer transformations where companies were going to largely move from being on premises to being in the cloud. That got stalled in 2023 because companies were being more conservative with their spend and wary of an uncertain economy. And so,
ladies and gentlemen, that does conclude today's teleconference. You may disconnect your lines at this time. Thank you for your participation.
Let me be very clear, okay? To recap, Amazon here. Amazon, phenomenal earnings. Obviously, you look through those numbers, they're nothing but super impressive. Conference call. We started that conference call, the stock was literally negative. It was in the red when we started the conference call, right? A lot of worries about this and about that. And Jassy, without calling a bottom on AWS, he basically called a bottom on AWS. If you read through everything he said there, and that's why this stock is up over $125 a share after hours, folks. Because without him saying it, he basically called a bottom, and he basically says, things are going to accelerate, if anything, from here on out. And so that's really good news, especially for Wall Street. Wall Street cares immensely about specifically AWS, and wanting to see growth accelerate there moving forward and stop decelerating, essentially. And so that was really tremendous news. Obviously, the e-commerce business is looking good. I thought one of the most bright spots for me personally as a shareholder of the company, like one of the things that excited me the most, like I already kind of felt like AWS was probably kind of in a bottoming out phase and we could start accelerating growth again. I already felt like that could probably happen, right? But a lot of Wall Street wasn't convinced, so that's what they were all looking at. One of the things that really excited me with these earnings was those international numbers. International was a huge money suck. You go back to this time last year, they were losing a fortune international. And now they're starting to get international actually to, very, very close to profitability. Very close. Like it's almost right there. And so I see a business here where North America is obviously amazing. International is going to go from a huge money suck to looks like it's going to flip to profitability. AWS growth looks like it's bottomed down. If anything, we can start accelerating that, baby. Advertising continues to boom for Amazon. And so overall, I'm just a very happy shareholder. This stock, in my opinion, should be up 10+% tomorrow. That finalizes today, and that finalizes this week's live stream, folks. I appreciate every single person in the chat. Thanks for being here, folks. Make sure you're following. Alrighty, guys. I'm a happy camper. That's what I'll say about that. So, yeah, appreciate everybody joining me. Much love as always, folks. Time to start prepping a video for the main channel. It's going to be a beast video. So, much love, folks, and peace.